Good afternoon or good morning, everybody, and welcome to another Fintech Nexus webinar. We are talking today about one of the hottest topics in all of Fintech right now. Fraud, I think, is top of mind. I think for probably every Fintech company and bank out there, fraud attacks have increased by just about any metric you want to, how you measure it. And we have to be on our top of our game when it comes to managing these risks. So we have an all-star cast of experts here who are going to talk us through the fraud risks that are happening today, how to mitigate them, how to think about fraud strategy, and much more. So with that, let's start with some introductions. My name is Peter Renton. I am chairman and co-founder of Fintech Nexus. It's my pleasure to be your moderator for today. Why don't we kick it off now? And why don't you introduce yourself, Rachel?
Sure. Hi, I'm Rachel Costello. I'm a machine learning engineer on the fraud team at Inscribe, which is the leading AI-powered risk intelligence solution for identifying trustworthy and creditworthy customers. I'm currently working on the complex problem of detecting fraud within images, but drawing on previous experience from my time as a machine learning engineer at Optum and as an IT consultant in Solex.
Okay, Alex.
Alex De Jesus, head of fraud management at Ramp. Been in the industry for the last 17 years, as Ramp reminded me earlier, across various institutions, from small startups to larger Fortune 500 banks.
Okay, Frank.
Hey, everybody. Great to be here today. My name is Frank McKenna. I work for a company, as you can see, Point Predictive. We're an AI company based here in San Diego. But I also have a blog called Frank on Fraud. And I research trends in fraud and I write about them. And I'm really happy to be here today.
Okay, well, let's get right to it, shall we? We're in January. We've got most of 2024 still ahead of us. Let's start with maybe talking about the most concerning, most interesting fraud trend that you guys have experienced recently. And Rachel, why don't we start with you?
Sure, yeah. So, I mean, like generally speaking, we've seen that the fraud problem has grown over the last year. We recently surveyed risk leaders at fintechs and financial institutions, and 80% said that they saw a year-on-year increase in fraud attempts in 2023. And if we delve in a little bit more, specifically 15% said they saw an increase in first-party fraud, while 13% saw an increase in third-party fraud, and 48% saw an increase in multiple types of fraud, which includes, first-party, third-party, and synthetic identity fraud. And part of the reason for this, obviously, is because debt in the US is at an all-time high. And unfortunately, fraud tends to thrive when the economy suffers. So in these situations, especially in regard to first-party fraud, we're not talking about the fraudsters that you would typically think of. We're talking about fraud from legitimate customers manipulating their own financial details in their bank statements or their pay stubs in order to get approved for higher loans and higher credit limits because they're struggling financially. And additionally, as we were pulling data for our 2024 document fraud report, which will be released in the next couple of weeks, we did an extensive review of the documents that Inscribe had analysed during 2023 and found that 46% of the fraudulent application documents did not include any alterations to the identity details, but contained alterations instead to the financial details. So the transactions, the income amounts, bank balances, transaction descriptions sometimes as well, which is a sign of first-party fraud. And when we go into this and look at first-party fraud risks by industry, a few other trends kind of appeared. We found that 60% of fraudulent personal loan application documents match the pattern of first-party fraud rather than third-party fraud, doubling year over year. So we have individuals here that are inflating their salaries or hiding bad spending habits rather, which means that they present like a much higher risk of delinquency. And if we then consider the SMB loan, the percentage of fraudulent SMB loan applications that included signs of first-party fraud is only slightly lower at 46%. But this is still a really high percentage when you consider that SMB loans are often riskier just due to the amount that's being borrowed. So subsequently, the stakes are much higher here. But the really scary thing is that these types of fraud typically go undetected because it's nearly impossible to catch manipulations like these. And the reason for that is that 90% of document fraud is invisible to the human eye. It just simply cannot be seen. So we have these legitimate customers that are passing initial IDV checks and are then going undetected throughout the process. So while detecting and preventing first-party fraud is a notoriously difficult task, it's not entirely impossible. So for example, like at Inscribe, we have a few strategies and tools that we use within the platform to detect these signs of first-party fraud. And just to give an example of a few of them, one is amount format anomaly detection, which determines if anomalous formatting is used within amounts on bank statements and pay stubs, so relating to like balances or transactions. We also have an X-ray feature, which shows the difference between the document that was submitted and the oldest version of the document that could be recovered. So you can see exactly how that document was altered or manipulated. And then finally, the last one I'll touch on for the moment is transaction data analysis, which surfaces risky transactions, which could be in the form of self-transfers, which are used to inflate balances, unusually large deposits, but also surfaces the absence of particular transactions. So in the case of like business bank statements, that could be the absence of, typical business spending, like accounting software that would be needed. So while all of those are invisible signs of fraud or first-party fraud, they are still detectable.
Mm-hmm. Okay. So maybe Alex, what are you seeing at Ramp that's new and interesting in 2024?
Well, actually, what Rachel said, I can kind of validate. I think 2023, there was a certain baseline in terms of first-party fraud. What's interesting in the last 3 months or so, we've seen a significant increase in attempts to commit first-party fraud, specifically so application fraud that looks like these are legitimate businesses. They're passing KYC, KYB checks. But when you dig a little bit deeper, to Rachel's point around transactional activity, when you look at bank statements, when you look at how is this business actually operating and how are they making money, that's where things start falling apart, right? So like they look like a legitimate business. They have a website. They have kind of the high level markers of a business that's in operation. But when you dig a little deeper, when you start looking at, well, all of the money seems to be just moving from one account to another. There's no real there's no clear, here's how they're making revenue, here's where their expenses are going. When you look at their website, there's weird anomalies. Either the website looks very stocky, is usually the word that our analysts use, where a lot of the photos just seem to be stock photos. The other day I was looking at, in preparation for this, I was looking at one situation where it looked like an advertising company, but when you start digging into it, a lot of the certifications actually led to another company. So first-party fraud is a broad space. So I would say like we're seeing everything from the synthetic type businesses where there's a little bit of crossover with identity theft, to all the way to the what Rachel I think was alluding to, where this is a business that was fabricated. And in some cases we see signals that it suggests it was fabricated around 2020, right? When there was PPP loans to go after. And I think they're not done. So they're just coming back for more. And so they're keeping these websites, these businesses sort of going, making it seem like they're legitimate businesses. But when you start peeling back and looking at the details, you're confronted with a bunch of little signals that when put together makes a picture of like, hey, this business is probably not legitimate. The hard part, of course, is the confirmation with it. When you have a third-party fraud, you can at the very worst, you can just call a phone number that belongs to the victim and verify like they didn't apply for this loan. But when you're dealing with first-party fraud, you're dealing with trying to figure out what are those signals that are indicative of a good business, a real business, versus those signals that are from a business that is there to either just do a credit bust out or potentially other financial crimes.
Okay. Okay, Frank, what's new and interesting in your world?
Yeah, I'd say there's probably three things I'll just kind of say that are most interesting to me right now. The first is something I read yesterday, which really was kind of a wake-up call. I read an article where Chase says that they get 45 billion hack attempts a day on their bank, and they've employed 67,000 technologists to counter that. I think it just kind of shows in 2024 the scale that we're up against. And if you think banks aren't under siege, this is a real wake-up call that that there's so much fraud happening right now. The second thing I think that's really interesting in the first-party fraud space, and Rachel kind of gave a lot of great statistics about it, but we're seeing, I guess towards the tail end of 2023, we saw two really big things happen in first-party fraud, I'd say counteractions. We saw Amazon go after professional refunders. These are first-party fraudsters that will call and say, I didn't get the package, when in fact they did, and get a refund from Amazon. They're done through Telegram and social media channels. Amazon actually went after customers that were doing that. These are first-party fraud customers, and that's something that has never been done before. So it kind of was a signal that companies are getting serious about first-party fraud. We also saw other articles out there and reports that Navy Federal started to shut down customers that were exploiting their membership benefits. They were selling their membership IDs to third-party fraudsters, and so that those third-party fraudsters could get accounts with Navy Feds. So they started to close down 50,000 accounts, was a report. And they started to take some measures against first-party fraud. I think these were positive signals that companies are, as the economy starts to cool down, companies are saying, hey, we now need to start doing something to increase our profitability. And one of the things that they're looking at is how do we cut back on our losses and cut back on these first-party frauds and customers and mules that are really exploiting our platform.
Okay, so before we move on, I'm going to ask everybody to fill out a poll. We have a poll. You should see it on your screen there. Did you see an increase in fraud attempts in 2023? If you could just click one of those, we're going to let this poll run for a minute or so, and we'll just get some sort of we'll get the results to you here in a little bit. Before we move on to the next section here, and which is going to be about really identifying and stopping emerging fraud risks. So, okay, we've had about half the people here have responded, and I'm going to. Can you like Frank, Alex, and Rachel? Can you see the results there as they come in? What do you? No?
I'm just seeing the questionnaire.
Okay, and I'm going to hit. So we've had 52% of responders. That's a really good percentage. So now you can see the results, right? Okay. Yep. So we've seen an increase in multiple. It's the most people have said that. Increase in first party. Increase in third. Is anything surprising there?
Nothing is surprising me there. I think that it's kind of been across the board, right? Fraud is going up in all areas of banking and finance. I think am I surprised? No.
The one thing is interesting. We have not seen an increase in fraud attempts. Zero people have said they have not seen an increase.
That
doesn't surprise me either.
Not at all. One of the things that I've wondered about is just there's a bit of a synergy that happens with some of the, for example, social engineering scams. We often think about ATO, but how much of those phishing websites are actually also geared to just harvesting identity information so that you can either do identity theft or synthetic identity. So there's definitely I think fraudsters are not necessarily tied to one mode. They'll try whatever mode is most successful. So I think it makes a lot of sense.
It makes a lot of sense. Alex, some interesting anecdote. You were talking about fake businesses and fake websites. We identified over 11,000 fake shell companies that are being used to supply verification of employment, for auto loans. So it kind of ties into your world, right? But there's just been this huge shift from personal synthetics to business synthetics. And so these fake shell companies are just exploding. And I know that's happening in the UK right now. It's a big problem.
Absolutely. When you think about it, it seems almost easier. When I look at when you actually start digging into the data, right? When you're creating a fake business, there's some key areas that are fairly easy. There are low barriers to entry, versus with the consumer, you have to kind of build a credit profile. And this depends a little bit on how you go about onboarding businesses, whether you do personal credit checks or whether you do SBFE type scoring of the business. But the barrier to entry seems a lot lower for businesses. So I think this and with the incentive of PPP loans a few years ago, I think bad actors have figured out this is a great avenue to exploit.
Mm-hmm.
Okay, let's move on. I know someone raised their hand, but we can't actually bring you into this discussion. If you have a question though, hit the Q&A button. We will try and get to those towards the end of our time here. So let's move on. I want to sort of now talk about identifying and stopping emerging fraud risks. How do you keep up with these risks before they become a big problem? Rachel, why don't you go first again?
Sure. Yeah. Well, I think one of the best ways to do this is to try get into the mindset of a fraudster. So think like a fraudster and go where the fraudsters grow. With like the growth of social media platforms like Telegram and Reddit, it's easier than ever for fraudsters to collaborate with each other. And we've seen countless examples where consumers ask how to edit their bank statements when they're applying for loans or credit cards. And then plenty of examples that were shared where people were giving tips, giving bank statements, and even offers to make the alterations for the people who were asking. And this effortless access to what's known as fraud as a service, I guess, makes it easy to understand why Inscribe last year saw the number of unique document templates increase by 20%. And there was actually a screenshot that was circulated internally recently of a Reddit thread where one user was coaching another on how to alter their bank statement details and then told them to take a screenshot of the bank statement and submit that screenshotted version rather than the original bank statement in an effort for the edits to go undetected. So in searching these sites to see what the fraudsters are talking about, I think that can be like really an effective approach to understanding these emerging trends. A second way is that I suppose, like we just said there, fraudsters, they're always evolving their techniques. And when one approach doesn't work, they'll try another and another until eventually one is successful. And one of the reasons why fraudsters are so effective and have become so in recent years is, like I just shared, they're sharing their tips, their techniques, their information. They're working together. And I think that's why industry collaboration then is so important, because risk teams should assume that same kind of collaborative mindset to fight fraud effectively, sort of banding together, learning from each other's experiences and sharing best practices. And then in doing so, it becomes much more difficult for the fraudsters to launch the same attack across multiple targets successfully. And there are several fraud fighting communities and resources available to help you learn from others in similar roles. And I'd just like to share a couple of them that fraud, risk, and credit leaders have shared with us. And they are About Fraud, ACFE, Fraud Lab, one of our favorites, Frank McKenna, one of the panelists today, who, as he said, writes the Frank on Fraud blog, and Fintech Nexus, who is hosting, obviously, this informative webinar today. And in the spirit of collaboration, Inscribe will be releasing our annual document fraud report soon, which will detail some of the risks to be aware of for this year, and will also just give some tips for how to fight those risks. And lastly, for keeping up with these fraud risks, using a solution that can help you to identify fraud attempts in the documents that you use for onboarding and for underwriting can be really, really beneficial. So like Inscribe works with a number of risk teams at banks, at credit unions and fintechs to help them minimize risk, but also to maximize efficiency really for the document review process across their teams.
Mm-hmm. Mm-hmm. Okay, well, Frank, you got a shout out there. Why don't you kind of give your perspective here on identifying and stopping these emerging?
Yeah.
Thank you, Rachel, for the shout out. And I do quote a lot of Inscribe stats on my blog, so I appreciate it.
Glad to hear.
So I consulted for a lot on first party fraud with a lot of banks and finance companies for many years. So I'll kind of tell you like what was my template for getting ahead of emerging fraud trends and first party fraud, and what I found just kind of across the board when I'd go into a bank that was struggling. First party fraud is hidden in credit and default losses. Go into any bank, go into any organization, most first party fraud is not labeled as fraud. So I think the first step is always defining what first party fraud is in your organization and then measuring it. And typically, first party fraud is going to show up in your early payment default buckets. That means loans that just don't make a payment or stop paying. They're going to come across as bank accounts that are going excessively over limit. If you're a merchant, it's going to be, excessive refund request. Every business is going to have some marker of first party fraud that's sitting in default. So you really have to go into those, find that, and then measure it. When you measure it, you actually have a loss line that you can then go to the finance department and say, we want to address this 50 million in annual losses, and we need some budget. Then you can go get a budget, then you can go get tools, and you can set up a team. And it's that simple. You really have to start with defining it, measuring it, getting budget, and then getting your team and technology. And that's where most companies aren't able to cross that hurdle because they don't follow those steps. That would be my advice of how you kind of get ahead of some of these emerging first party fraud trends.
Okay, Alex?
Frank is spot on. So we've crossed paths before, and that is the first challenge, is getting internal consensus as to how to define the problem, and then once you've sort of agreed on a definition, the work that goes into labeling. I think that's something which a lot of institutions struggle with. On the non-fintech side, you're usually dealing with like system technology limitations. Well, it's not so easy to add a label to an account. So you have like spreadsheets that you're having to keep track of. It's just operationally intensive. On the fintech side, it's a lot easier. Just our experience. It's more about, at that point, you're actually, I think, it becomes a matter of how granular do you get and what is it that you want to measure exactly. So to Frank's point, there's the loss line that you want to measure, because ultimately that does allow you to get resources and ability to have kind of line of sight of what you're really trying to move. But there's also kind of how are you going to actually take what you're learning and feed it to data scientists, right? So you label, what granularity do you label, right? Do you label at the account level or the application level? I think that's kind of basic. You need to do that. But I think if you can go a step further and actually start embedding the information that the analysts that are looking at these applications or accounts, that are what they're identifying, that'll help data scientists create features that then can help with the modeling that can help you fight the fraud long term. I think that's something that kind of goes a little bit, it doesn't get thought of until much later, but it's incredibly important to kind of have the ability to say, hey, the reason this is first party fraud is because we see these signals within this application. Otherwise, a data scientist can then say, hey, I'm going to throw a bunch of data and try to figure out what stands out. But the reality is that the hardest thing that I find in data science, and Rachel, let me know if I'm off the mark, but it's you can throw in, let's say, IP geolocation. That's a great feature, right? A lot of people are, with device fingerprinting, we're capturing information about where someone's logging in or interacting with the website. That piece of information by itself, however, may be not as valuable as what's the distance between your IP geolocation and your address on the application. That yields a much more insight. And so if you can actually capture what the analysts are doing in your labeling so that you can kind of get more granular and you can kind of start that pipeline of, hey, here are the features that we need to generate so that we can not only measure the financial impact of this problem, but we can then actually start modeling and start building proactive strategies to sort of treat it, right? Because that's kind of the next challenge around first party fraud is you can identify it, but then what do you do with it once you have it in front of you? Especially in the credit world where you have to dealing with adverse action and you have to be careful of what features you use to identify these frauds. But by and large, I agree with what Frank said. I think that the first step is labeling and classifying it with a definition that everybody can agree on, and then you can add on that into that to get more granular.
Okay, we're going to launch our next poll here. This is the second of 3. The question is, do you check applicant documents such as bank statements, pay stubs, tax forms for signs of fraud or manipulation? So we're just going to let this go for 30 or 40 seconds here, and we will then look at the results. Okay.
Just while we're waiting there, I'd like to say, Alex, your data science knowledge was on point there, spot on.
Thanks.
Looks like it is becoming the end of the day where you are, Rachel. I can see the sun setting behind you.
Yeah, it'll be dark in a few minutes probably.
Yes, yes. So
Toward the end
Rachel's
of the
joining
day.
us from, is it Dublin, did you say?
About an hour from Dublin.
Yes. All right,
A
we've
little
got
place called Port that no one will have heard of.
okay, so we've got half participation again. I'm going to end the poll now, and you'll see the results here. It's interesting. We've got yes with most people. It's like, I guess 80% of people say yes. Okay, we got one person who doesn't check documents for fraud. But any comments on the results of this?
Yeah, this is interesting, right? I think a few years ago, I used to get banks saying, is there any technology to scan these pay stubs? Because I've got my fraud analysts looking at them manually, and they don't know how to spot the fraud, right? Because you bring people off the street. So I think using some sort of like an Inscribe that can scan just for those signals is a key part of it. It's almost impossible. I mean, I generate fake pay stubs just for articles and things like that. And sometimes I have a hard time. We have a fraud analyst team, and they bring me pay stubs, and they're like, "Is this fraud?" And I'm like, "I have no idea. I can't look at it." So I think having some sort of document fraud detection solution is such a assistance to the fraud analyst team.
Right.
I think it kind of goes back to our early conversation around identifying the problems and being able to measure them to be able to get resources. I think it's a little surprising to see how many people are still manually reviewing. I know that there's some document types are more difficult to leverage technology on than others, but at least our experience with Inscribe has been you need to start with a solution that can help you begin to sort of identify what are the red flags and signals that you can look for, and from there work with them to revise and update the models. And they're obviously working constantly on working the model. So if you can label what's fraud and feed it back to the solution provider, they can build upon their models to get better at detecting fraud. So it's one of those things you can kind of wait on the sidelines, or you can just kind of get it in place, start automating, start identifying what these solutions signal on, and build upon it as fraud manifests itself, and you start seeing what patterns. I think it was not long ago when we were talking to Inscribe about, hey, the X-ray technology, all these things are great. It would be great to get to the level of like you're analyzing the actual transactions that are in the bank statements to get to signals about like, hey, this document may be legitimate, but the activity that's happening is not. Or to Rachel pointed out, fraudsters are smart. They know that they shouldn't send a PDF. They should send a screenshot, because that's a little bit harder to get into what's been manipulated. But if you look at the transactions, usually they're not smart enough to know, hey, don't reuse transactions across bank statements, because that'll become very obvious.
Right.
Yeah, and I think like in using a fraud detection solution, I know Inscribe has it, I'm sure probably others have it as well, potentially, is like in some kind of analytics tool. And this is bringing it back to the point you mentioned earlier, where if you can say like, these are the number of fraudulent documents that we're seeing, and these are the fraud patterns that we're seeing in it, and you can go to somebody else on your team and say, this is a real problem, and then you can implement more solutions based on that. And I think having a solution like that in place makes it easier to make those cases.
Okay, let's move on to risk strategy now. And what can we, I'd love to get your perspective on how we can ensure that you have the right strategy in place to combat first-party fraud and other types of fraud attempts. Frank, why don't you go first on this one?
Yeah, I think if I was thinking about making sure that you have the right strategy in place, I think it really comes down to you have to get the organization, and Alex, you kind of alluded to this, you have to get the organization to buy into the fact that you're going to have to make judgment calls with first-party fraud. With third-party fraud, nobody has a problem with third-party fraud declining loans or interjecting things in the process, because there's a victim that you can talk to and confirm that this was fraud. With first-party fraud, it's very different. Your customer is the one committing fraud. They're not going to admit it, so you're going to have to make a lot of judgment calls. In fact, that's what mostly you're just going to have to use kind of a weight of the evidence to decide we need to close this account down, or we need to not approve this loan, or we need to stipulate more and ask for more information. So I think it really comes down to being able to measure that problem, get organizational buy-in, and then what are the actions that you're going to take when you spot that first-party fraud. So that would be kind of my advice, is that get that process right, get the organizational buy-in. If you think about Amazon, their fraud team was probably yelling about this professional refunding for many years. It took them many years to get the organization behind it to actually do something about it.
Okay, Alex, what are your thoughts on risk strategy?
I agree with what Frank said. What I would add is keeping the big picture in mind is really important. At the end of the day, we're here to service good customers, right? So recognizing that sometimes in fraud, we do kind of focus on the bad actors. But the reality is that's the 1% problem. 99% of customers are actually good and legitimate. So when thinking about this strategy, to what Frank said, you really do want to kind of have not only the institutional buy-in, but also kind of thinking through what is your treatment strategy and what are kind of the waterfall of things that could happen from it, especially in the first-party fraud space. There's obviously litigation risk. There's regulatory risk, depending on how you approach it. So keeping all those different stakeholders in mind and all the different avenues in which first-party fraud can kind of evolve into is really important. So in another way of saying, if you're going to, for example, eject businesses, you kind of have to think through, okay, what will that look like when you make a mistake? Because inevitably, as much as we try to get our precision to be 100%, we're going to make mistakes. We're going to identify something that's fraud that's not really fraud, as well as the opposite, right? End up with losses. But when you eject a customer that's actually legitimate, what is the mechanism for that, to making it right? And also, and what are the consequences of that? Are you prepared to handle the social media, if it gets into social media, and what the repercussions are of that, if there's litigation? All those things need to be really discussed and thought through as part of the fraud strategy, even though that's beyond necessarily the fraud department. And this way, kind of getting close to your cross-functional partners and figuring out, hey, this is sort of kind of what we're thinking. This is the problem. Measure the problem. We know how big it is. This is how we're thinking about treating it. Here are the potential things that could happen, and really get to a good balance of, you're going to do this because it's going to be ultimately the best thing, versus, oh, I'm just trying to stop a fraud problem. You have to kind of think about the bigger picture of what's the impact to the firm, to customers, legitimate customers that may get impacted, any kind of regulatory fallout, et cetera. So think big picture when working on the strategy.
Rachel?
That's an interesting point, Alex. Like, if you look at the New York Times, and you see all these articles now where customers are like, my account was closed, and then inevitably they took a check from somebody, or there's a lot more media attention to these customers that are getting their accounts closed. And so it is interesting. That's the flip side, is not everybody's a first-party fraudster.
Right. And it's hard because the fraudsters know this, and so they're leveraging the agency. CFPB, I'm sure, has a fair share of people complaining about activity that a bank has taken on an account. It's actually perpetrated by a fraudster. And so you, as part of that strategy, you really have to kind of be confident that, hey, when you're going to take action, you've really built a good case for it. It can't just simply be on a whim. So yeah.
Yeah. Rachel?
Yeah, I think the strategy to fight fraud needs to be kind of deeply technical and kind of echoing what has already been said here today. That it needs to just require the most innovative models and necessitate sort of like ongoing improvements to remain effective. And risk teams need technologies that specialize in racing fraudsters almost to the next vector of fraud detection. And we know that machine learning models and AI models can reap the benefits of network effects, which is a really effective way to fight fraud because the more data that they ingest, the smarter that they get. I mean, smarter. And they can remember like millions of data points. So, for example, a manual reviewer may not be able to recognize that a bank statement that they're looking at now has the same 100 transactions with the same dates, descriptions, and amounts that they looked at maybe like 6 months prior. But a computer is able to do that. So it's really important that those technologies are in place. And another trend that we're seeing at the moment is an increase in image submissions. So, for example, a customer takes a screenshot of a bank statement on their phone and submits a JPEG or a PNG file instead of the original PDF that was provided by their bank. I know we talked on the fraudulent aspects of that, but sometimes it is legitimate. And from the customer's point of view, the format is inconsequential. All they care about is providing the details that are required. But for fraud detection software and many other tools on the market, that's really not the case. It's so much easier to detect fraud in PDF documents. But Inscribe has built and continues to build detectors that make it possible to detect fraud in images and address that market demand. Because, of course, you could say, well, like, why not enforce the format is PDF when submitting these documents? But we know that image submissions make for a better, faster, and ultimately simpler experience for our customers. So one of the priorities is to continuously increase the capability of our image tools. Specifically, I've been focusing on enhancing our models to detect more fraud in image files. And one of the approaches that we use is a deep learning technique referred to as transfer learning, where a model is developed for one task and is then reused as a starting point for another. So, for example, we can take a model that was already trained on millions of images and documents as a starting point for creating a new model that then detects, anomalies within an image. So there are lots of approaches that we're implementing, but the key here is that a strategy that I think would be really, really beneficial in, fighting risk and fighting fraud here is to work with vendor partners that are committed to ongoing performance improvements based on the evolving customer needs and to ensure that they're leveraging the latest AI approaches.
Okay, well, we're going to get to our final poll question here. We're just going to put it up on the screen. Do you use AI to identify document tampering today? So if all of you could kind of fill out that in the next 30 seconds or so, that would be great. We'll wait till we get a representative percentage of the participants here. Okay. I get to see this live in real time. It's interesting to see the bars get bigger and smaller as we go here. Okay. I think we'll... Okay, I'm going to end this now. We're almost at 50%. So there we go.
Rachel, while we wait for the results, I'm kind of curious, in working with trying to figure out what are the signals that are helpful in detecting tampering, especially with images, how much do you consume from your clients, right? Like, are you building kind of a consortium model sort of with the inputs of clients, or is it you're more kind of having your own team of analysts that are reviewing things and labeling fraudulent documents?
To be honest, it's kind of a combination. There's a few different approaches that we're taking, and one of them is like our analysts going in, looking at the documents and finding ones that they can identify as having been tampered with or being fraudulent, and then we can use those to create models. But then in some other situations, we'll get like feedback from customers about images that they've spotted and they think look particularly fraudulent. And we do collaborate with customers sometimes as well in like identifying images specifically that they would have flagged as being fraudulent. And sometimes it's like the case where it's really evident change, you know, as in, I think I'll talk about it maybe at some point here, but is in like it's a photograph and it's got like alterations made to it digitally. So text has been overlaid on it and it's very, very obvious. So in some cases, like our analysts pick that up, our customers draw it to our attention, and then we can use that information to build the models from there. So to summarize, yeah, basically multiple inputs from people.
Excellent.
Okay, so here's the result. Any comments on the results of this poll?
I mean, that's a lot of people are either looking or using it. And I think if you went back 4 or 5 years ago, this would not have looked like this. So the adoption, that's impressive.
Right.
I'm a little surprised
Yeah,
about. Sorry, Rachel.
Right, go ahead, Alex.
I was going to say I'm a little surprised by those reporting that they don't plan to use AI. Just simply with I can see the challenges of what do you do in terms of adverse action and things like that. So I can see some challenges there, but fraudsters are getting better. It's
Fraudsters are using it, right? So yeah.
Yeah, it's exactly. So it's a little bit of how do you keep up and become, how do you scale without using AI or machine learning?
There's a website called AI Pay Stub Maker. So if you they're using it, right? So
Right.
you're absolutely correct. If you go out, you can see that. I don't know how good it is, but they are planning on using it.
Yeah, interesting. Okay. Let's before we get to audience questions, maybe we can just go with one more kind of maybe what more advice do you have for the participants in this? You know, we've covered a lot of territory already, but maybe we could just go with one more piece of advice before we get to the audience questions. Rachel?
Yeah, well, I guess, you know, here at Inscribe, we care deeply about the fraud problem because it is a tax on economic progress, and ultimately the cost is often passed down to the consumer. They're the ones that are being affected by it. So to safeguard against fraud risks, the ones we talked about today, as well as a whole host of other fraud techniques that exist within this kind of ecosystem. Yeah, I just have like a couple of tips that I would like to share to create a stronger fraud detection and prevention function, hopefully in 2024. So the first one is to continuously assess and adjust the existing controls and tools that are in place to address these evolving threats within the current landscape. And just a reminder to something I mentioned earlier, we should go where the fraudsters are talking to get ideas on how to stop approaches that they may be taking or coaching others on. And that could be in the realm of AI, as we just mentioned there, where there's these like AI pay stub generators. But going to these like social media outlets is where you can find out this information. Second tip would be that when a fraud event occurs, explore how the fraudster was able to circumvent those existing protocols and then update those weaknesses accordingly. So the big trend that we talked about today was first-party fraud. And if you have a fraud event where first-party fraud was involved, then maybe just take a moment to consider what measures you have in place to detect alterations to the financial details, the one that's are specifically generally kind of, you know, changed in these first-party fraud cases. The third point would be to leverage digital technologies to identify trends more quickly, as well as augment the capabilities of your human risk analysts with these superhuman powers using AI. And Inscribe is a great example of a platform that can give your analysts these powers and that utilize AI in most of their, you know, fraud detectors. And the last point then is just to collaborate with industry counterparts through various forums and consortiums to stay on top of the latest developments, share best practices, successful strategies, like the ones that were shared today. And if there are any forums or communities that people are aware of and are part of, it would be great if you could drop them in the chat there today so we can kind of, you know, learn from each other. Because if there's one thing that we can undoubtedly agree on, it's that fraud occurrences will increase. And likely become much more complex this year with the rise of AI. There are already multiple tools that exist, like we mentioned, that utilize AI for the purpose of generating or editing documents. Kind of similar to Frank there with the pay stubs, there was one tool that I tested that allowed me to upload a bank statement and alter any text on the document, the descriptions, the amounts, the names on the accounts. But the scary thing was that the AI was so powerful that the changes that I made look completely legitimate. Like there was no identifiable way for me to distinguish between the original and the edited text. And there was another tool that allowed me to create a fake driving license for whatever US state I wanted, again, by harnessing the power and speed of AI. So for fraud teams to fulfill their primary function, I guess, of reducing risk, as well as helping the organization to identify clients that will fuel healthy and responsible growth, they need to develop the strategies and adopt the solutions that will help them to stop all matters of fraud, from the traditional to the now trendy with AI.
Okay, great. Alex, additional advice?
The advice that I would give is education is really important, especially just taking a broader lens to other fraud activity, right? I think we didn't really get into some of the other flavors of first-party fraud or friendly fraud in the dispute space, and there's just there's a lot of avenues that we could talk about. But the advice I would say, and it's an advice that I'm trying to apply myself, is just get better at educating those other stakeholders in your organization. I think fraud teams can get very much focused on kind of their team and their operations, but in organizations where you have sales teams, where you have customer service representatives that are actually sometimes really the first line of defense, in that they're the ones kind of having that first interaction with a customer or a perpetrator at times, right? Having them equipped with knowing kind of what are the red flags, what are the things to look out for, is really helpful. In especially if you can get to a place where you can kind of have that stream of information being passed from one group to another. But educating all the stakeholders as to the problems that we're facing, and all this information that we've talked about today, right? How sophisticated bad actors are. It'll help with downstream when you are trying to get resources to add tools or to add people to solve a problem. So yeah, the power of education is can't be underestimated.
Right. Frank?
Yeah, I'd say so. We did our predictions recently over the last couple of weeks, and one of my predictions for 2024 was that we were going to get a first party fraud bonanza. And the reason I said that was because here in the US and actually in the UK, banks are going to start to reimburse more customers that are victims of certain types of scams. And I think that's great. That's great for the consumers, and it's great for banking too, to establish more trust. But you're going to have a big increase in first party fraud in the claims area this next year. So I would say pay attention to your claims areas. Anywhere between 20 to 30% of those scam claims might have first party fraud in them. We know that fraudsters are approaching people on social media, trying to do collaborations with them where they will work with a customer, work with a bank customer, get their login credentials, take some money out and split the proceeds, and then the customer will claim that it was fraud or it was a scam to try to get the money back. Those types of things are going to become more critical, as looking at your claims area to identify, and like Alex says, educate. What do you look for? How do you spot this? Use technologies like Inscribe so you can look at the documents where there might be some signals. You just kind of have to really pay attention to those claims areas this year.
Okay, so let's move to audience questions. We've got quite a few. We're not going to get to all of them, but maybe we can start here. We haven't talked about check fraud. There's a question here on that. What do we expect the impact of check fraud to have on banks this year? How is this best measured across the industry? Frank, do you want to take that one?
Oh, wow, that's my favorite subject, check fraud. Yeah, so that's what's the impact? It's going to be just as bad as last year. I think we're going to see, I think the impact last year is about 24 billion. I think it's going to be 24 billion, perhaps even a little bit more. I don't see it slowing down. And the reason I don't see it slowing down because there's not any silver bullet yet. Telegram, there's a huge secondary market for these checks. So if you steal a check out of the mail, you can put it on Telegram and sell it for hundreds of dollars. That's just driving more demand on the street for these checks. So there's just more checks getting funneled in, and that's going to mean more fraud to the banks. I think this year, what we're going to see in check fraud, though, are banks investing. I saw some surveys that we're taking where banks talked about what are they going to invest in this year. Check fraud is on the top of the list. So I think we're going to start to see some good traction in terms of technologies and ways to stop it. I personally like the idea of adopting what credit card issuers did with the text messages, where did you write this check for $450 to John Smith? Confirm yes or no. I think that type of kind of basic fraud control is something we're going to need to see with checks, but I think it's going to be a tough year myself.
Okay, then next question. What are some tactics and tools that you employ in an application funnel to identify bad actors without creating friction? That's a challenging one, right?
Yeah, absolutely. I think every institution battles with that, right? How automated can you get? Obviously, Inscribe. So I don't know if maybe Rachel, you want to speak to that, but obviously, just having if you're not applying technology, there's no real way, right? To the polls results earlier, if you're asking for documents, that's generally considered friction, and then there's an operational process in the back end on top of that. That increases SLAs, and it just it's a bit of the approach that I've taken always is a little bit of a layers of defense approach, where you're kind of leveraging technology as in the right place at the right time throughout the funnel. The more technology, the more sophisticated you can get around the treatment, so you can minimize the friction. So it's really a data science problem at the end of the day. It's like, hey, how precise can you get in terms of detecting the fraud as soon as possible, so that you're minimizing operational and good customer friction.
Yeah, and then I think some people are hesitant to adopt certain technologies because they think there'll be some friction in actually like adopting it. But say like in the case of inscribing, there's like a pretty seamless API integration. So the responses and the insights can be easily incorporated into, existing workflows. And then the time, I guess, to get a response when it runs through like the Inscribe processes is much less than what it would be for like a manual reviewer, where they might spend 15 to 30 minutes reviewing a document on average, whereas Inscribe can return that within seconds. So then the time of the manual reviewers are actually like freed up to then go and put their time into the more complex cases, and they can at least automate maybe like some of the process there, which would reduce friction then for a lot of customers, I guess, that are making those applications.
Right. Okay. Next one here. What should a community bank do to reduce fraud risk? And I guess it goes to a broader. There was another question that also came in on that, similar to that. What do you do if you don't have a big budget to manage all this?
That was a challenge that I faced in a prior role. When you're kind of limited in resources. I think that there are plenty of sources of information, of intelligence sharing out there that are free, right? So at least if you can at least get intelligence as to what's happening in the fraud space and get ahead of some of the schemes, that can help. But yeah, I think it kind of goes back to a little bit what we talked about earlier. I think even smaller institutions, they may not have the budget of a larger institution, but if you're not measuring it, right? If you can't get that baseline, like, hey, here's how big of a problem, then it becomes really hard to advocate for that technology, for those tools to help you fight fraud. So yeah, it's also a matter of kind of just making sure that the numbers actually, the cost of preventing it is outweighs, or does not outweigh the benefit of preventing the fraud.
I think that the important note there with community banks, we know, like if you look at Telegram, and Rachel always says you should always monitor Telegram, you should, because the fraudsters actually target banks that they think might not have technology and that they can get through the controls. So community banks are often targeted. So you really do have to almost pre-invest before you have a problem, because once you're a target, your losses can really increase.
Right. Okay. Next question here. When assessing AI tools that allow for more advanced document manipulation, do you still see discrepancies and indicators within the document metadata, such as author, program dates, etc.?
Yeah, I think it can depend. Sometimes it's to do with like the format that the document was actually uploaded in. So in some cases, if the metadata is still rich there, you'll get the AI throwing up certain signals and then get other ones from the metadata. To be honest, in a lot of the documents that we review and analyze within Inscribe, you don't typically rely on just like one kind of signal or detector that's flagged. It might be the presence of, you know, like Photoshop potentially in the metadata, but then also other signals that were picked up in the document, like certain text was masked, or this information was changed, or the dates are mismatched, or, you know, there's generally multiple features that you can get from that. It's not solely relying on one or the other.
Okay. I think we got time for maybe two more. What impact do you think wider adoption of FedNow payment capabilities will have on the types of fraud that may come from that? Instant payments, instant fraud, right?
Instant payments, instant fraud, account takeover is going to go up. Money Mule accounts are going to go up. You know, you're just going to see, because that's a big increase in limits. I think that's going to come with FedNow, right? So you're going to see some pretty sophisticated account takeover, and increases just generally. I think there'll be some element of first party fraud in there too. We talked about, you know, fraudsters collaborating with customers of banks to try to take advantage of that FedNow. So I think we're just going to see an increase in everything when the fraudsters just try to get access to those FedNow instant payments that are really high dollar amounts.
I think I would add that I think the responsibility for receiving banks is I think historically not been as intense as it's going to be, right? I think it's going to be, you can't just simply trust a deposit that's coming in. You're going to have to really think about it in context to the account that it's coming into.
Okay, so last one, we have touched on this, but I'd love to kind of, you know, tease this out a little bit more before we end. What are the latest AI trends used by fraudsters and as part of fraud defenses?
Great one. I love that. Yeah, that's a good one.
Good question. Sorry, do you want to go ahead, Frank?
I'll just go real quickly. Voice clones, that's going to be a really big one this year. Voice clone ransom is, I think, going to be a big problem. And imposter fraud schemes using expression camera, which is like talking photos, and also HeyGen can create really good, excellent avatars that are nearly indistinguishable from real people. So I think we're going to see that this year.
Yeah, I think the same. Like, obviously, we're going to see more of those like generated documents or AI edited documents, at least. What Frank was saying there, the audio changes, the type of technology called like deep fakes, which is essentially where I could take a video of myself holding up, you know, my ID or this fake ID that I've created, and then I can use this technology to alter my face to, you know, look like Peter, for example, you know, and it will like look quite legitimate because the technology there is becoming quite sophisticated. So I think that's a big one. In terms of like the actual defenses that are in place or that could be in place this year using AI, one of them is like document similarity. So if you say, for example, within Inscribe, if you are up to upload one particular document, we can run AI models on it to look at other documents that were flagged as being similar to this. And then you can go through those and see if any are suspiciously similar to the point that you might want to flag it for fraud, or at least do, you know, kind of more in-depth reviews on it. Another one is in relation to templates, kind of a similar thing where you're like doing a similarity check on it. With AI, there's going to be so many more templates that are being created, I think, and it would be very hard then for, say, manual reviewers to keep on top of all of those templates, or at least to be trying to compare each submitted document to all of those templates that have been created. So I think the use of AI there and trying to compare those would be really, really important. And there's actually models that are currently being experimented with in the kind of AI space, which are being used to predict whether a particular image was created with AI or not. So I think it would be really interesting to see the developments in that area, to see if it could be applied to, you know, documents like IDs that were potentially like created using AI, using some of the tools you mentioned earlier. Yeah.
Okay, well, we'll have to leave it there. We have run out of time, but boy, what a fascinating discussion! I think it's such a rich topic. There's so much happening. I learned a lot today, and I think you know, all of you have good job security, because it's a big problem that is only going to become more challenging. So with that, I want to thank Inscribe for sponsoring this webinar and putting this together. Really appreciate your support there. Frank and Alex, Rachel, thank you all for your insights here. And of course, thank you for the audience for tuning in. With that, I will wish you all a good afternoon and have a great rest of the day. Thanks, everybody.
Thank you.
Thanks so much.